Hey, it's Bill from Investing Systems. Today I wanted to do something a little bit different, and I wanted to talk about the Power Emini software. And today I actually wanted to focus on trailing stops and talk about trailing stops and bring a really good example from yesterday about how and why trailing stops are one of the best strategies that you can employ when trading. And interestingly enough, managing trades with a trailing stop works for just about everything, any time frame, any instrument, no matter what you're trading. Um, there's so many benefits to using a trailing stop. Now, everybody knows when you're trading futures that you absolutely have to use stops, right? It goes without saying that when you enter a trade, no matter what your strategy is or what your time frame is or what you're trading, you have to have a stop loss in because we primarily focus on trading the MES futures. And the other day, I think it was Friday, some economic news came out at 10 o'clock and the ES moved 31 points in 1 minute. And so you futures traders know that a 31 point move in 1 minute is just that's an astronomical amount of points for the market to move. And so if it moves against you, you certainly want to have a stop in place. And it just goes without saying, futures are extremely leveraged. So I'm Bill with Investing Systems, and I'm here to talk about Power Emini software and a little bit of how it works and the strategy, and show an example of how it uses trailing stops to manage positions, which is about the most important thing. That it's one of the most important aspects to the software, and it really ties into everything. So if you haven't seen the software or if you're curious about it, you can see it at poweremini.com. I also have this page at investingsystems.com/poweremini. So let's dive right into the chart here. I don't want to make this too long. So I marked up this chart of yesterday's alert, and what I decided to do was mark all of the trailing stop moves. So that's what we're going to talk about today. That's the most important thing. And interestingly enough, there's a lot to see on this chart, but the main thing we want to focus on here is these yellow, I guess you call them dashes. Now, the software itself, actually I should say the Ninja companion indicator. The software is a standalone Windows program, but the NinjaTrader companion indicator, for those of you using Ninja, as you know, plots a yellow horizontal line wherever the current stop is. And of course, the trailing stop moves in real time. And yesterday was just a really good example of, as I was analyzing the trailing stop moves, I decided rather than have all these yellow marks as horizontal lines on the chart, it made more sense to actually just draw them. So it would otherwise the chart was just a complete mess. As you can see, there's all sorts of levels on this chart, but basically what transpired yesterday is really interesting, and it goes to exactly what I want to talk about today. So you can see that prior to the cash open, there was basically this big sort of trading range here. Here's the 9:30 open, and as you can see, right after that, the market took a winger. I mean, that's a huge that's a huge down move. And of course, this is a 5-minute chart, right? You see this 5-minute chart. So our system actually uses 1 minute, excuse me, as an entry point. So a lot happened in this 5-minute candle that you see right here. But basically, price was bouncing around in the range, started breaking down, and it broke down rather quickly. And so we got a short alert right where this dashed line is. And basically, about a minute and a half later, that short filled a little bit lower down here because the market was moving really quick. I mean, it's been a fast market lately, and so a lot happens very quickly. anyway, the short filled here, and then as soon as that happened, here's where the initial stop went, right? I extended this line over a little bit, and looking at this chart, that was actually a pretty good spot for it, right? It was kind of like right above, right above the high of this prior 5-minute candle and right above these prior highs and kind of at the upper end of the range. And so basically, um, while it seemed like it was a pretty good distance away, everything's based on the ATRs, right? So interestingly enough, it didn't just place this stop right above this candle. It was based on all of these ATRs and what was transpiring in real time. So, but it just so happened, it's just a coincidence that the initial stop went right above sort of the body of this prior candle, and that's when the alert filled here, right? And so literally within about 2 minutes, this initial stop turned into a trailing stop. As the price approaches target one, typically you'll get a trailing stop move that tightens up that initial stop very quickly. And so those of you that are using this Power Emini software know that the number one goal is to get the trade to break even quickly, right? So that's sort of the idea. Real quick, the whole concept of the system is we get a range break, and we have kind of what we call an easy to hit target one, and then we have a significant distance away from the entry target two. And when we get a trend move like this, we're looking to take some profits at target one, get the stop the break even, and then if the market cooperates and makes it to target two, well, then it's a big win. So, but anyway, back to the trailing stop here. So as the price approached target one, we got this first trailing stop move. And by the way, I wanted to mention the way the software moves these trailing stops is not linear. It's basically dynamic, and you can kind of see that based on the various distances between the trailing stop moves. So anyway, we got this big down thrust, and maybe I should have, in hindsight, maybe I should have put this all on a 1-minute chart. But quite frankly, once we take the entry on a 1-minute time frame, then what we do is we switch over to a 5-minute chart and we monitor the trade on a 5-minute chart. A 1-minute chart is it's too hectic. There's too much noise. It'll drive you nuts watching it. A 1-minute chart's extremely erratic, and the idea is you can see some of these distances here, right? This trigger range was like 11 points, and so these are really significant ATRs on these candles. And so a 5-minute chart is what you want to watch once you're in a trade. The reason we use a 1-minute chart for the entry is because a lot can happen in 1 minute, right? I mean, you can see here this was I believe about 3 points. We got in between the time we got an alert and the very next 1-minute closing price bar. This is like 3 or 4 points here, and so the idea is that we want to get filled kind of close to the actual alert price. However, we also, as you know, and you can review this in the documentation, we also use a 1-minute closing price to trigger us in a trade, and that typically helps prevent getting sucked into false moves. Not always, but sometimes it does. Anyway, I'm focusing on the trailing stops here, and so the idea is that as we got forward progress to target one, we got this first trailing stop move, and then basically you can see on this next candle, which actually hit target one right here, that's when we got the second trailing stop move, which basically put the trade at about break even. I actually have a screenshot of the software from yesterday here, and just to sort of point this out. So all this happens in real time. You can see there's second stamps there. So at 9:36 and 23 seconds, we got the alert. And then it was about a minute and a half later, it triggered in. We got the targets. And then literally 2 minutes later, we got that first trailing stop move right here prior to target one getting hit. Now, something interesting about that is that sometimes the software will move the trailing stop prior to target one getting hit. And there's other times where target one will get hit and then you'll get the first trailing stop move. And that's just based on the approach. So lately the market's been really super fast. And so if we get a really fast move that goes from triggering in an entry and then literally goes straight to target one without any hesitation, a lot of times there will not be a trailing stop move prior to that. But basically in normal market conditions, on most times we'll get a trailing stop move prior to the first target getting hit. And then of course in between target one and target two, you typically expect at least two, maybe three trailing stop moves. So let me go back to our chart here. Zoom it in a little bit. And so basically once target one was hit here, there was your trailing stop, and then as it made some progress towards target two, that's when the subsequent trailing stops got hit. And this is the interesting one because that I guess it would have been the fourth trailing stop move you saw on the chart here basically put the trailing stop at our entry, right? This red line where it says short filled, that was the entry price right there. And so at that point, and going back to what I said earlier, the idea of the software, the idea of the system, the algo, is that we're trading a range break, we're looking for a directional move, a relatively easy to hit target based on the ATRs that are occurring at the time. And as we know, the market's been extremely volatile lately, so the ATRs are elevated, and I've written a lot about that. But this fourth trailing stop move basically put the trade at the entry point. I'm sorry, put the trailing stop at the entry point. So interestingly enough, there was no risk of a loss once target one got hit, and that's another big aspect of this system that if you've read all the stuff at poweremini.com, you know that once target one gets hit, the trade's in the clear, right? It's essentially a break even because we're taking profits at target one, and this is assuming trading two contracts also. So we're taking profits at target one, and then we're holding the second contract for target two. But once target one gets hit, the trailing stop basically moves almost an equal distance. And that depends on the fill too. And that's kind of an interesting little nuance of the system. So as you can see, and like I mentioned a minute ago, we got filled, like instead of getting filled one tick or two ticks from the alert price, we got filled a few points away from it. So that's going to make a little bit of difference on how close the break even is. The system is calibrated so that if we get our fill like one tick past the alert price and target one gets hit, the trailing stop will have the trade like right at break even. If we get a fill a few points away, then the trailing stop move after target one gets hit may put us, a few ticks or a couple of points on the wrong side of the trailing stop. So it just all depends. But as you can see, the trailing stop moves pretty quickly. So once target two got hit, and you can see target two got hit, but prior to target two getting hit, we got these other trailing stop moves. And so the idea is it's just tightening it up and tightening it up. And this is the last one here. This is actually the trailing stop move that got hit. So a couple of like the market chopped around here. It actually went quite a bit lower and then bounced up and tagged that trailing stop. And so, the system was done for the day. If you were trading two contracts and once you sold a contract at target one, you sold a contract at target two, that's it. You're done for the day. But here's the thing is at any point in time, we never know what's going to happen next. Right? Like you can look at this chart, you can say, well, geez, it looks like it was ready to bounce. So we got some, a little bit of consolidation down here around this line, and then it ended up bouncing up and hitting the trailing stop, I'm sorry, after target 2 was hit, and then it continued considerably lower, and then the rest of the day it just chopped around in this huge range, right? If you were watching. But my point here, and what I really wanted to drive home, was the idea that the best way to manage any sort of trade, any sort of open position, is to set an initial stop, and then as the price moves in your favor, you basically tighten up that stop, tighten up the stop, tighten up the stop, because you just never know, right? In theory, if the price had just continued to plunge like it was here, then this trailing stop would just continue to move down along with price. And what's interesting about this is, and I don't want you to get the wrong idea, because on some of these trailing stop moves, it kind of looks like they line up with the bodies of the candles, but that's actually not how it works. It's just it's a coincidence. This one's kind of interesting because it really does line up with the upper portion of the body of this candle, but that's just not the way it works. It's dynamic. It's based on price and time. And I think we saw an example of that last week. Well, we did, because we got an alert and the price continued, I believe it was higher, and the trailing stop never got hit the entire session. And what happens is, if there's an open alert that stays open, into the close like that one did, the trailing stop will tighten up and tighten up more aggressively towards the end of the session. And so it's actually a function of price and time. Like I said earlier, the trailing stop moves are not linear, they're dynamic. They're based on price and time and the ATRs of the current price bars. So go back to that screenshot here. Yeah, this is yesterday was actually an ideal session. You can see the date up here, March 18th. This is a screenshot that I took of the alert software yesterday morning after target 2 got hit. So basically what happened is, as the day progressed, or as that chart progressed, there was all those trailing stop moves would have appeared at the top of the system notes, but this was pretty easy to read the system notes, so I took this screenshot here, and there's a lot to see here. So if you're not familiar with the Power Emini Alert software, you can check it out at poweremini.com. I've started a new thing here with the blog. There's some lengthy articles here, but what I've started doing here is I started a brand new blog by month, and so every couple of days I add a little bit to it, which is kind of cool because it's easy to read. It's not really designed to be a recap. However, what it's good for is actually our users. It's kind of especially good for new users because it's kind of a learning experience, right? So anyway, I want to talk about the trailing stops, and I also wanted to pull that down so you can see. If you're interested in how this software works, there's a lot to it. I'm not going to get into it right here, but you can go to poweremini.com. Real quick, back to the trailing stops. And what I mentioned originally is, no matter what you're trading or what you're doing, or where you're entering or whatever, place an initial stop with the idea of managing it using a trailing stop, even if you didn't have targets, right? I mean, suppose that you didn't have targets and you were just going to take a trade here, manage it using a trailing stop. This is actually a pretty good example of why you can't just necessarily put your trailing stop like at the high of the previous bar or the high a couple bars back or whatever, because with these type of ranges here, I mean, this is around 18-20 point ATR on the ES here, actually the MES, but with these types of ranges here, it doesn't necessarily make sense to just go a couple of bars back or even the prior bar. So these trailing stops that the software calculates are calibrated based on a lot of different things. And quite frankly, the system looks at the market structure, and so the targets and trailing stops a lot of times are going to be different on based on whether it's a long or a short trade. But when in doubt, just tighten up your trailing stop, tighten up your trailing stop, stay with it. And quite frankly, this very last spot where the trailing stop ended up, quite frankly, was ideal for this move because you can just tell by looking at the chart it ended up just above the high of this 5-minute bar, and there was a couple more 5-minute bars, and then this is the one that got tagged. So um, the ninja indicator will automatically move the trailing stop. It'll be a horizontal line on your chart. So anyway, I thought I'd do something a little bit different today, talk about and show an example of what trailing stop ratchets in the Power Emini Alert software look like. So thanks for tuning in, and I will see you next time.